fund managers suspended at Axis Mutual Fund for front running. Wait, what does that really mean? How does it impact you? Should you be worried and panicking right now? Should you redeem your funds? Have you started to look at which of your funds might get impacted? What does front running really even mean? And does it have any impact on your investments? So many legitimate questions, of course, that are running through our minds right now as this big headline screams at us from almost every media organization. Well, we are here to answer these questions. So welcome to Simplified with me, Tanvi Shukla, where today we're going to talk about what is happening at Axis Mutual Fund and what does it really mean for you as an investor who has been saving their money, their hard-earned money in mutual funds. First, let's get the story straight. What is it that we know about what has happened so far? And honestly, frankly speaking, we don't really know too much right now. 2 fund managers have been suspended for front running, management of 4 ETF schemes and 3 funds after that have been changed. So new fund managers have been given the responsibility of handling these 7 schemes which these 2 guys were actually looking at. Axis Mutual Fund says they've been investigating this since February of this year. The last 15 odd days there's been a lot of buzz, rumors in the market about what is really going on, and now the information has been confirmed by Axis Mutual Fund. SEBI itself is also looking at it and is perhaps going to be holding a wider investigation. Now, what is it that we know more about it? 7 schemes. These are the schemes that you need to look at whether they are in your portfolio or not to begin with. We don't know if going forward the investigation scope gets widened and there are more funds that come under the scanner. But Axis Consumption ETF, Axis Banking ETF, the Axis Nifty ETF, Axis Arbitrage Fund, Axis Quant Fund, Technology ETF and the Value Fund. These are the 7 funds that were being run between these 2 guys. Let me in fact tell you, Viresh Joshi and Deepak Agarwal are the 2 people who have been suspended. Joshi actually was the head dealer and the fund manager of 5 of these mutual fund schemes, while Agarwal was the equity research analyst and fund manager for the other 3 schemes. Now, Axis Mutual Fund, and I'm sure if you are an investor, you already got that email. A detailed email has been sent to all investors. They've also issued a public statement that says that we proactively started the investigation in February 2022. We are actually using external advisors, so it's not just an internal probe where there would be a possibility of a cover-up, but an external agency has been, an advisory agency has been brought in to look into what's going on. The funds, like I told you, have already been reassigned. Even the dealer who was dealing with these funds has been reassigned. These are the steps that they have taken to try and assure the investors, and they've also said that in case you still do want to redeem, there is no bar on redemption, and we are in a healthy situation when it comes to liquidity, so investors should not worry. So then the big question that we're looking to answer today, how does this really impact you? Well, firstly, I already told you that as far as these funds and schemes are concerned, they've already been given, the responsibility has been given to new set of people rather than those who are under scanner and under investigation. The second thing is that both the market regulator SEBI as well as Axis Mutual Fund are still investigating this case. So right now, we don't know too much about it, which is why experts would say maybe you shouldn't panic right away and rush to get out of these funds if you own them or any other funds linked to Axis Mutual Fund. In an overall setup, if there is large scale front running that does take place, then there is bound to be an impact on the stock prices of those specific stocks. Now, that means that the stock prices have been manipulated. That's kind of the impact that usually market experts say takes place when large scale front running and rigging happens. We don't know the scale of it so far again, so we have to wait and watch for that information. But experts do warn that you should continue to track especially your mid cap and small cap funds if you hold any. So I'm not going to say more about it because I am not really an expert here, but I do have Furquan Moharkan, a staff writer with the Morning Context and an author himself who's joining me right now, and he's actually looked at this entire story in quite a lot of detail. So Furquan, thanks for speaking with us. First up, let's just try and understand what is this allegation essentially and how does this impact any investor?
So Thank you, Tanvi, for having me. So basically, starting what is fun, I would start with what is front running. So basically, let's in retail investors, it can be using price sensitive, non-disclosed information also. But let's talk specific to the fund houses. How do mutual fund houses do front running? So, for example, there is a fund manager. He is going to place an order on behalf of the fund house in half an hour, for say 2000 crore rupees. So obviously the stock prices, when he invests 2000 crore in that stock, the stock prices will rise heavily. So what he does, he tells some of the brokers with whom he has his own setup, he tells them to basically buy stocks on his own behalf right now, immediately. So once he buys the stock, it increases the prices of the stock. And once 2000 crore is invested, so his stock prices shoot up again, and then he sells the stocks. So there are two ways in which investors suffer here. First, 2000, for example, if the share price was 10 rupees, when he first placed the order, the price would have gone to 11 rupees by him front running. And then when he sells the shares after the mutual fund house has placed the order of 2000 crore, so the immediately after that, when he sells this thing, the prices will come down, and so there is another loss for the investors. So there is a law. I mean, I have been seeing people saying that it's a minor discretion. A lot of people have been saying this thing, that it's a minor discretion, but clearly this is manipulating the investors, which is not a minor discretion.
Oh yes, absolutely. So so one aspect, like you pointed out, that what essentially in front running, what they're doing is the fund manager, the broker would know that this is the decision and that a fund has taken as a strategy, that I'm going to invest in these stocks,
Yes.
and that would mean that the price of that stock will go up because a
Yes.
large order is placed in. So before that, they do their own personal deal.
Yes.
They invest in the same stocks and they make money. Now they could be on the
Yes.
buying side and the selling side, and like you
Yes.
said, once they book their profits and then they get out of that stock, the price may fall, which is the second round of loss that the investors may face. Now, so I completely agree with you, Furquan, and I think often what happens is market advisors would try and in a bit to calm down people, say, oh, it's just a minor transgression, but it's not, which is why the market regulator takes it very seriously.
Yes.
There have been a series of actions by the market regulator on similar practices, and I wanted to talk a little bit about that. So what role does the market regulator really play? How do they view front running as a practice which may be taking place in various organizations?
So front running is illegal to at first place. It should not have taken place. But unfortunately, till now, our regulator has been reactive rather than proactive, being proactive in nature. So we have seen many front running allegations coming till now in history. One was in case of HDFC mutual fund also, once it happened. So what fund managers do in that case, they pay up without taking the liability, they pay the notional losses to the investors. I mean, that is not the end of it. Is the fund manager fit and proper after this? After he has front runs, after he has done front running? Clearly, SEBI needs to rethink. And I think which is changing now with the new SEBI chief at the helm. I think she is taking things more seriously on this front. So I think there should be first, the notional losses for the investors should be covered up, and then there should be a fit and proper criteria. Like RBI, after Rana Kapoor fiasco, RBI came up with fit and proper rules for and stringent fit and proper rules for the bank CEOs. So same should be the case with the fund managers.
One more thing which is often being referred to here, and I wanted to emphasize on it. Many say that front running is different from insider trading. Will you help our viewers also understand
Yes.
just how different they are, and is the penalty also different? Is the impact also different?
So insider trading, when you have internal information about that company, a company going to announce, for example, XYZ company is going to announce that it has got it has got orders worth 10,000 crore. So this announcement is going to come 2 hours later. So obviously, once that announcement comes, the prices will shoot up. The share prices will shoot up. Now you are privy to that information, for example, and you invest 2 hours before. So obviously you would be making huge gains by that unpublished price sensitive information.
Right, right. Okay,
So
thank you so much for that. In fact, like Furquan was also pointing out to us, SEBI is regularly looking into this issue and taking action. One example that he did point out was of the HDFC mutual fund. This was in 2006, and that was a big one where an equity dealer at HDFC mutual fund passed on information to one of the brokerage entities in a bid for them to separately make money. Then last year itself, 3 people of the Fidelity group were banned for similar kinds of transgressions. This year, before that in 2021 June, order against 3 dealers of Reliance Securities, Reliance Mutual Capital was also taken. So there have been many such instances. In fact, if you put together all of the SEBI orders, action that they have taken, there may be more than a dozen entities, individuals or otherwise, who have faced SEBI action in just the last 1.5 years. But what is really this action? Largely it is to say, okay, you've been banned from the markets, or trading, or on your own behalf or on behalf of anybody else, or there is a monetary penalty that is brought in, which could go as high as to 25 crore, 3 times the profit that you've made. So this is where the SEBI's framework really exists. They have regulations, unfair trade practices regulations of 2003 that are usually used to penalize people after an investigation is done. But obviously, because this keeps on happening again and again, it isn't enough, and a stronger framework is needed to observe whether people are following rules and regulations. Now think of it in a simpler manner. What is essentially happening here? As a fund manager, even as a broker, if I have access to information that somebody is going to buy or sell a chunk of stock in a big amount which will impact its price going up and down, then I'm going to, before that happens, I'm going to make a side deal, tell my friend or a broker or a family member to execute a trade such that when the price goes up or down, I am able to make money out of it, which is wrong. Now, many say that this is also getting intensified, or the ability to make such kind of transgressions, dubious activities, has heightened during the work from home setup. Is that something, Furquan, that you will be able to shed more light on? When everybody is working from home, it becomes difficult to really track activities. Who are you speaking to? How are you interacting with them? What dubious deals on the side are you cracking? Is that a big concern now?
I think it would be as possible in the work from home setup as much in the physical office space. So I don't think that there is going to be work from home is going to impact that much. It's just a cover up that people put up, okay, there is work from home, that it's not going to happen. If you have something in your mind, so you can erase the documents, you can erase everything, but you can't erase the thoughts of the person and the knowledge of the person. So if you have the knowledge, you can pass on that.
Right.
So COVID-19 is not something which is, I mean, yes, there is a problem that, the phones are less tracked. In global, I was, much before I was into journalism, I was into investment banking. So we had to always deposit our personal phones outside with the security guard. Only then we could have entered the investment banking floor. But the phones that we were carrying inside were the office phones, BlackBerry phones, and which were highly securitized. I mean, there was a lot of security associated with it. You could not make personal calls and anything. It was only meant for clients and the colleagues to be called that. So it was basically like kind of a walkie-talkie. So this kind of a setup is missing in the work from home setup.
Yeah.
But other than that, you can't erase the thoughts.
Yeah.
Person knows that we are going to invest, he can come out and call.
Yeah, and that can probably still only be in very big organized entities, but there are brokers and managers of all kinds working at different levels. There are journalists, business journalists who, and SEBI has actually investigated them and acted against them also for similar kinds of front running or insider trading in conflict of interest, where you're giving advice on certain stocks but you're already booking your own profits alongside. So tracking it is difficult. What would you say we need to do to improve our checks and balances in the system?
So there is an algorithm that SEBI and exchanges run on this. So basically, you see the anomalies. There is a big fund house has placed a big order of 2,000 crore, and before and after that, you see the trades. If there is a regular pattern in the trades by the individual, so there is a regular pattern. Some guy is constantly investing thousand. Say before the 2,000 crore order, he's constantly investing 10 crore, 10 crore, 10 crore, and selling it after this thing, after the order is placed. So you have to investigate that anomaly. I don't know why this algorithm has not been used properly, but now it's being implemented. I can sniff that clearly because SEBI has also asked for forensic audit of excess mutual fund and everything. So I can that algorithm, depending on the algorithm, is the best way to deal with this practice. See, I am pretty much sure that I can tell you that we won't, and we can't be able to stop this practice.
Absolutely.
So if I would go on to say that people have been seeing mutual funds with skepticism, but I'll say if 99% of the mutual fund guys are honest and clean, that those 1% keep repeating the errors every 6 months. So it becomes something like Bollywood. If something wrong happens once in 6 months, so everybody starts thinking, oh my God, the entire Bollywood is full of crimes, which is not the true picture.
Yeah. दुनिया में चोर चकारी तो बिल्कुल रोक नहीं सकते हैं. The point is that you should have a good law enforcement agency or a market regulation agency that keeps a check on this and punishes those who do get into these kind of activities. Before we get to the larger question, what should investors do at this point? You have also written about what's going on within the specific fund house. Give us an insight into the fact that is there a larger concern with some of the mutual fund houses that needs to be looked at? What should investors know?
Yes, I mean there is a cause of concern. I specifically point out what was happening at Axis. I mean, you have the guys, you yourself mentioned the schemes that they were handling.
Yeah.
So these are all exchange traded funds. So you basically invest in a particular exchange traded fund. It's a passive fund. You don't need to. Fund manager doesn't need to take make reallocations and anything of that sort.
Right.
So basically, front running happens where you have to make reallocations and allocations by the fund manager. So clearly, there was a support from the equities team, somebody in the equities team.
Okay.
So why has the role of equities head not being investigated? He's still there on the Bloomberg. Second thing, so the bank, the mutual fund might have been saying that no, there is not much, it's not a management level issue. But I want to ask one particular question to them. Why has been Bloomberg idea of the CEO of Axis Mutual Fund been deactivated? So as last as yesterday evening, all his peers of other fund houses were there on the Bloomberg, but he was not there. So it is not plausible for me that he was not using Bloomberg ID because he used to personally look into various trades at various stages of life, and he was a CIO before this. So quite sure he was there on the Bloomberg, but he's not there anymore. Third thing, so you have to make sure that your risk and compliance head reports to the board and not to the CEO, which was not happening in the case of Axis Mutual Fund. This is an important thing. When you're CEO, you're auditing, you're reporting to the person who you are auditing,
right?
Who you are keeping vigil over, which is not something that they should have done. Another point, mutual fund houses should have a clear and clean communication with the investors. So if you look at Axis Mutual Fund's own statement, they started suo motu investigation in February on these two fund managers. And it was only till, there were murmurs in the media circles that there is a fund house which might have problem of front running, that they suspended these two fund managers.
Correct.
And investors were kept in complete dark. It's a mockery of fiduciary duty.
Correct.
By any mutual.
Okay, so yes, which is what I also alluded to in the beginning, that because there was already so much buzz in the market, this information had to then be put out. And Furquan here pointing out that it should have been done earlier. Also pointing out a few of the other transgressions or examples of where processes have not been followed, are not ideal, but do exist, and that is what calls for a larger investigation. Now, so keeping that in mind, and what you have also written for the morning con context, if I had to ask you, what should investors do right now? And maybe, one aspect is the Axis Mutual Fund investors, those who may have put their money in their schemes, but also otherwise, what would you say?
So, Tanvi, I would suggest investors to go by their hunch, because time and again people have been people have been donning the hats of analysts and researchers, but nothing has come out of it. I'll tell you a small example. An HNI person who I happen to know, he once told me that he is going to invest in excess stock. I asked why. He was like, because my that person's security house fund manager had told him that we estimate that this stock is going to go up 20%. I asked that HNI friend of mine that whether or not he has asked the mechanism that they have used to calculate that there is upside of 20% on this stock. But he had not. I mean, this is what is happening on HNI. This is what is happening with HNI people. Imagine the level of financial illiteracy at the retail investor level, gullible retail investor.
Yes.
Furquan, and invest according to that.
We seem to have a little bit of patchy connection there, so we lost the last line that you said. You were talking about, the extent of financial illiteracy that exists, and there are multiple reasons for it. I know a lot of people just simply have a fear of, the financial aspect of it. They don't even want to understand, or they cannot understand, or they don't have the time to understand, which is why usually even those who have the money to invest it somewhere will outsource it to an advisory agency. So now, obviously, the first thing that we should do is make ourselves more aware, read up into what schemes we have invested in, where are they investing in, what kind of returns are they giving us, and if our money has generated enough return. But let me put that aside, and that is one big chunk, of course. The second is for people who don't know. When SEBI investigates this, or has investigated any such case in the past, has it ended up impacting the fund itself? Now, mostly people want to know if I will burn my hands by investing in this fund. Should I redeem? Should I get out now? Has there been any kind of an regulatory action or action by the fund house itself that has led to people losing money when it comes to front running, etc.?
I tell you, in front running mostly happens in the equity stocks. So redemption pressure, like we saw in Franklin Templeton fiasco, because those were debt schemes. So it does not work as much in the equity schemes as much as in the debt schemes, because for debt schemes you have to look at the maturity of the bonds in the portfolio. But in case of the equity schemes, there is no maturity that you have to look at. Another thing, when it's junk bond and you sell it before the maturity, there are very little buyers in the market for those junk bonds. So there is a problem of liquidity which was faced by Franklin Templeton. But in case of equity schemes, you just sell, you take a hit on the NAV and just keep on selling the stocks when you get the redemption pressure. So where I believe Axis Mutual Funds, that one statement that there is no problem of liquidity,
yes,
is actually true. But I don't know whether when they are talking about redemptions, what is the scale? Because my sources, as I have mentioned in my story, they are telling me that redemptions have been around 20,000 crores.
Right.
So that is a quite a huge number. That is almost 10% of their AUM.
Right.
Which is a scary number.
Yes.
So this, now if you look at, and it's quite plausible to believe that there have been redemptions. If you look at yesterday, wherever Axis Mutual Fund had concentrated holdings, whichever stock, they were down.
Yeah.
In fact, in case of Nestle India, Axis Mutual Fund owns 83% of the actively managed funds, and Nestle India was down 3%.
Yeah.
52-week low. So clearly there was redemption pressure, and I have people telling me that their SIP has gone down. There is a redemption pressure, but it is manageable. It won't cause problem like Franklin Templeton.
Yeah.
There would be no problem on liquidity.
Yes, I think, and a lot of people will remember, for those of them who don't, Franklin Templeton Mutual Fund controversy and scandal broke out a couple of years ago, and it was a big one. But there, the 6 schemes that did land up in trouble were debt schemes, These are equity schemes that we're largely looking at, which is where the difference lies, which is what Furquan is explaining to you. The Axis Fund Management has said that there is no bar on redemption and they have enough money, but beyond that we don't know what is the extent and at what point could it get tricky. Also remember that this is just initial stages. More information will come out and hopefully will come out either from Axis or SEBI as the investigation progresses, because we have very limited sketchy information of the extent of the scam, the scandal and the rot that may have existed. How many, were there more transgressions or not? Were there more dubious activities? To what extent were the people within the management involved or not? Lots of those questions are yet to be answered and an investigation is going on that front. Thank you so much Furquan for joining us and really breaking it down. Any last word that you might want to add which will help our viewers understand this issue better?
So I would say, I mean, there has been a catchy, MP has come up with a catchy phrase that mutual fund sahi hai, rightly so. But I would ask investors to go before they invest. Mutual fund bilkul sahi hai, but just check whether fund manager sahi hai.
Yeah, absolutely. Fund manager, by the way, they don't get that kind of an importance within the common people who are investing. Obviously, within the business entity, people know and make stars out of these fund managers.
Fund managers.
Yeah, but a fund manager's duty is essentially to identify where to put your money, in which asset to put your money, how much of your money, when to get out of it, when to buy, when to sell. The entire investment strategy for that mutual fund is decided by the fund manager. And Furquan was mentioning, the two kinds. There are active fund managers and passive fund managers. The passive ones don't really make too many changes to the fund itself and just let it go because the strategy itself is that it will make you enough money in the long run. But they are very important to basically deciding whether you make money and how much money you make. So it's not just whether the markets are going up and down. A lot depends on your fund manager, so you must also figure out a little bit more about them before you put a lot of your hard-earned money into any mutual fund. Thank you so much Furquan for joining us and breaking this down. I hope this was helpful to the investors and our viewers as well, and as we get more information we will definitely put it out. Thank you for joining us on this edition of Simplified.
Thank you so much, Tanvi.